The AI landscape is getting a lot broader.
With a constantly evolving AI scene, some of the biggest players are seeing the most volatility.
They've all been down sharply since April.
But instead of looking for that next big AI winner, MarketBeat's Chris Markoch has a list of 3 ETFs that could help retail investors earn some steady profits on AI without all of the risk.
You're going to get a substantial dividend. This could be a time where you also get some stock price growth to go along with that dividend.
It's a different approach to AI investing that helps take off some of the stress from individual investors. Let's dive in. Chris, so great to have you back on the show today. We are talking about AI, something we talk about on this channel all the time. If you're a subscriber, I know you've seen it before. If you're not a subscriber yet, please hit subscribe and follow our daily news content here on MarketBeat. We'd love to have you stick around. Chris, let's dive right into this video today. You have 3 safer ways to invest in AI. Before we get to the list, I do want to just talk about kind of what the market has been doing in general, especially with these big AI companies, the big tech winners out there. They've had a really wild couple of months now in the market.
So when you're talking about a lot of these AI stocks, you're looking at, in many cases, the Magnificent Seven. And these are stocks that have a tremendous amount of share volume every day. They have a lot of liquidity to them. So when investors are looking to raise cash quickly, they're looking for things to sell, they normally look at these sectors. And this was, the tech stocks have been going up very sharply in 2023 and 2024. So it's not really that surprising that when investors were looking for stocks where they could take some profits out, they were looking at these stocks. And a lot of AI stocks, a lot of the big names that we talk about a lot on this channel, Nvidia, Microsoft, Meta, they've all been down sharply since April. But one of the things that happened was immediately after that sell-off around April 2nd, April 3rd, is that a lot of these stocks started to climb back, especially after the announcement yesterday that there's at least a pause and a framework for a potential US-China deal.
Yeah, things are certainly moving in the right direction, but even before the volatility we saw in April, there was a little bit of rotation going on out of some of these really big names in AI. Some companies more than others, some seeing more of a hit than others too. So let's talk about that volatility with AI investing, and then we're going to get to that potential solution around some of this volatility.
Actually, it's a great point, Bridget, because it was around January, February of this year when China launched their DeepSeek model, their LLM. AI was already somewhat shifting out of hardware and into areas like software, but that really accelerated the shift because all of a sudden investors were looking at the AI landscape and they were saying, well, maybe some of these hardware plays we're looking at are becoming more commodities, and where the real opportunities might be in software companies. So that was good for stocks like Palantir, and maybe good for stocks like Snowflake and CRM and things like that. So they were starting to rotate out of some areas of AI and into other areas of AI. And now you're starting to see maybe that broaden out even away from the technology sector. But for the purposes of what we're talking about today, let's just say the AI landscape is getting a lot broader.
Yeah, very much so. There's a lot of companies to choose from. Not all of them are going to be as successful as the other, and some's lifespan might be shorter or longer than another. And so this is a really great solution for investing in AI in general in the future of this field rather than betting on one company or another. And that's looking at AI ETFs. Today you have a list of the 3 best AI ETFs for investors to get involved in right now. So let's get to that first ETF in AI.
So we're looking at the Global X Robotics and Artificial Intelligence ETF. It's BOTZ is the ticker symbol, BOTZ. What I like about this ETF is its focus is on the applications for artificial intelligence. So the fund invests in companies that are looking to embed AI into the devices that are used in factories and drones and delivery vans and surgical equipment. You're going to see chip stocks in there. For example, Nvidia is one of its top holdings at around 8.7% of its holdings. But you'll also see Intuitive Surgical is up there with about the same weight as Nvidia. It's pretty close. And then of course you go further down the list and you see a name like SoundHound, which we've loved on this channel, and it's in there too, although the weighting is a little bit different. SoundHound only has about 1% of the weight in this fund. But the interesting thing about the fund is it seems to be focusing more on the applications of AI. So not just the hardware and really not the software at all, but more where AI is going and where we're going to see it on our devices and in applications that are going to make that intuitive sense to people, and they're just going to say, okay, that's where the money is in AI.
Yeah, those are the companies that we've said several times have the chance for the next wave of growth in AI, and that's the application of how to use AI in the future. I want to ask a quick follow-up question on this one specifically, as we're going towards those companies that have the potential to grow, like SoundHound that saw a 20% jump this week. If you are in this ETF, can you expect to see the same kind of big gains that you might see in some of these individual companies? Or is there maybe a more average growth to be expected in this kind of an ETF?
Great point, Bridget. And so what I would do is I'd say if you look at the chart for each one of these ETFs, for the last 12 months, they're all up in that range of around 14 to 18% for the year, in the last 12 months. And I believe I looked just before we came on. I believe year to date, all of them are slightly down. So they're probably like down 3% for the year. And that's pretty much in keeping with the broader market. So I think that's really what you want to look at. These ETFs are going to probably give you returns that are closer to what the broader market is doing, not so much what individual stocks are doing. The benefit of that is when the market is in correction mode, like it was in April, you're probably not going to feel the hit as badly as if you were in some of these individual names. The downside is when a stock like SoundHound goes up 20%, you're not going to experience that either.
Yeah, very interesting. And why some people love ETFs and some investors would rather do the individual stocks. Let's move on to the next ETF pick. That's a really good play in AI.
Right. So the next pick is the Global X Data Center and Digital Infrastructure ETF. Ticker symbol there is DTCR. Now, so I just said that if you looked at the bots ETF, you're looking at somewhere like where the future of AI is going from an application standpoint. This is more of the where AI is now, because as the name implies, you're going to see a lot of data center names here. That trade isn't dead yet. We've been hearing this earnings season from companies like Meta and companies like Microsoft who have been saying they may be trimming back their AI data center spending, or they may not be growing it as fast as they initially claimed, but that money is still out there. They are still going to be spending on data centers, and that's where this ETF locks in. The focus is on over 50% of the fund's holdings are in real estate investment trusts. Those are REITs. So you're going to see names like Equinox. You're going to see names like Crown Castle, American Tower. These are some of the best names in that sector. Investors who are familiar with REITs understand that you're going to get a substantial dividend for holding the stock. And this could be a time where you also get some stock price growth to go along with that dividend.
I think this is a really interesting one to invest in the future of AI as a whole in companies that you wouldn't really look at otherwise. When you think about investing in AI, you think about the big names out there, but these REITs that are owning the land and the property where the data centers exist are also a bet on the future of AI.
You know, and I should say, although about 50% of the holdings of the fund are in the REITs, you're also going to see names like Nvidia as part of this fund, because what company is supplying the chips that these data centers need? It's a company like Nvidia. So you're getting a lot of balance. You're getting some balance in your portfolio that way. And the thing about this fund, when you compare it to the other two that we're going to talk about, is this fund has an expense ratio of around 0.5. Now, some investors may still think that's too high, but all of these funds have a fairly high expense ratio, but that's kind of reflective of the premium you're going to be paying in this category.
You're paying a premium, but you are also getting the benefit of the dividends in this ETF, like you said. If you are a dividend investor looking for high yield dividends, we have a free report just for our YouTube viewers like you. Scan the QR code here or click the link in the description of this video to get our report on the 10 best high yield dividend stocks for 2025. Again, exclusive information just for our YouTube viewers. That's totally free if you click that link in the description. Okay, Chris, let's move on to your third ETF that's a great bet for AI.
Okay, so the third pick I have is the Roundhill Generative AI and Technology ETF. The ticker symbol is CHAT, CHAT, and that's kind of a clever ticker symbol because this ETF is focusing on companies that are dealing with generative AI technology. So what I would say is this fund is really good if you're looking for a AI-focused way to invest in a lot of the Mag 7 because a lot of the fund's weighting is around the biggest names in the Mag 7. We're talking about NVIDIA, we're talking about Amazon, we're talking about Apple, we're talking about Microsoft. All of them are in this fund. One thing that's kind of different about this fund is many ETFs track themselves to a specific index. This fund uses a proprietary methodology and they score and they select the companies based on that methodology. Now, we were just talking in the last one about expense ratios. Of the three we've listed here, this one has the highest expense ratio of about 0.75%. So it is pricey, but then again, you're seeing what some of the names are. And so it may be worth that premium.
Yeah, very interesting to consider. I think the theme that we're seeing here is some of those big AI names are in all of these ETFs. So the question becomes, which one should you own? Is there just one AI ETF to invest in? Should you own a little bit of all three? What's a good strategy when you're looking at ETFs for investing in an entire field like AI?
Well, the one thing is, investors will know I have two names that are in the Global X family. So if you're looking at that, that's kind of a key. You can hold both of those in your portfolio, the bots and the DTCR. There's going to be some overlap with a company like NVIDIA, but otherwise there's not a lot of overlap in those funds at all. You couldn't put money into both the bots and the DTCR, and you're kind of accomplishing two different things. In fact, with the DTCR's focus on a lot of REITs, you could almost say one's a growth play and one's a value play. The chat's a little different because there's so much focus on the Mag 7. But then again, if you were to look at the DTCR and the chat ETF, you could probably own those two together. And again, you wouldn't have a lot of overlap.
All some interesting perspectives for investors to consider. I think the last thing I want to close out this discussion on is what have these ETFs been doing over the last couple of months in volatility in the market? Have they been seeing growth, stagnancy? Are a lot of people investing in them right now? Just curious to see what the charts are showing for these different ETFs.
Yeah, the one thing about these three ETFs that investors would notice right away is the charts are remarkably similar. I mean, they all dropped off sharply after April 2nd, and then they've all been climbing back in the last month. I think all of them are up double digits in the last month. If you were to look at the immediate impact of the China-U.S. trade talks, the Roundhill one seems to be seeing the most volume activity. Today it's about double its normal volume, so that may be something there, specifically since that one's tied in with a lot of the Mag 7 names, and some of those CEOs are with President Trump right now in Saudi Arabia, so there could be something there. But I think really remarkably what investors will see is a lot of these funds have tracked very closely together, and I suspect that will probably be the way it goes. Again, this is a way of playing the sector and playing the AI trade without necessarily getting yourself in the idea of having to pick one or more specific stocks, which many investors just would prefer not to do.
Yeah, it takes some of the guesswork out of it, some of the research work out of it, and
Yep.
just plays the whole AI field instead. Well, Chris, thank you so much for giving us this 3 AI ETF picks to look at right now. Let us know what you think in the comments. Are you more on the line of looking at ETFs for AI, or are you one to pick those individual stocks that might come with a big bounce or a big drop every now and then? Let us know what you think in the comments. Thanks again for watching, everyone, and as always, happy investing.